At 8:30 a.m., we will get the jobs number. But who cares? We already know. We already know what the Fed's doing. We know they're cutting rates. It's just a matter of how many times this year? One, two, three, four? I guess it's depends who you have on the Fed. We got some earnings reports, and they are going in opposite directions. Broadcom, holy mackerel, blowing it away, up 12%. Gonna have a little talk about Lululemon and tariffs. You talk about sneaking out of a position. Dennis will update us on that. We got other stuff moving. DocuSign has a decent report. Special guest today at 8:35. And what better timing could you have to talk about the IPO market? 8:35. That will be Eric Krull. Jam-packed day here to end the week on pre-market prep. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good afternoon, or good morning, that would be. Up 7 handles, made a new all-time high overnight, 65.31, backing off a little bit. Haven't even seen the close yet. We'll see if we see it in today's session. The buck is down 31 cents. The chart just looks sleepy here, just around 98. TLT bounced, but we'll see how long that lasts. Up 15 cents, 87.38. Supply concerns still weighing on USO, down 53 cents, 73.65. GLD, little back off the all-time high, but back up 51 cents today, 327.20. Silver futures flat, 37 even, or that'd be the silver ETF. And Bitcoin rebounded 2,500 bucks, 112,690. Let's bring in Triple D into the conversation. And kind of a sleepy after hours, Dennis, but not in a couple stocks.
No, obviously we had some earnings scheduled here. It was a big day. This is one of the last big days of earnings here because now we get into the lull. Always, when we get to the end of the quarter, last month of the quarter here, it's going to be slow. We do have Oracle next week, but there's not a lot happening in the earnings calendar. Adobe's another one on the highlights for next week. But last night, there was a lot of companies reporting. Lululemon, DocuSign, Broadcom, Internet of Things, which is Samsara, UiPath, Guidewire. I mean, there's a pile of stuff. But there's really 2 or 3 that are the focus here today. I'm going to start with Lulu. Everybody thought we'd start with Broadcom, but we'll start with Lulu because this is your disaster of the day. I was long this stock up until yesterday, and we started talking about an SDN. I was like, I'm too nervous to take it through the report. One, I didn't like the fact that it really wasn't rallying with the other stocks. It rallied yesterday off AEO, which gave it a nice day, but it really, it hadn't had much of an earnings run up. There didn't seem, so I didn't really like the tape action ahead of the report. I was nervous about tariffs. That was in the discussion as well. I was nervous about tariffs because I do think, they make most of their clothes in Vietnam. So, there's got to be some impact there. And then just the pricing point. I think the consumer is still doing a little bit of trade down right now where they're not buying expensive stuff. They're buying, they're trading down. They're going, cheaper stuff. So, and there is a lot of competition for Lululemon. So I put all that together. I was like, you know what? I'm selling it. and I didn't make much on it because I bought it just in the beginning of August, saying that maybe potentially the bottom is in. I kind of didn't intend to trade. I didn't really intend to take it through the report either. Remember, I always said my stop was going to be out at 185, which was the low of the move. And I'm like, you can't control that in the earnings report. So I'm like, I'm just going to take my 7-point gain and move on. So I sold it yesterday. I sold it early. I sold it at 201. I did run up to 206. So I did sell a little bit early. I'm glad I did because the earnings report is an epic disaster here. And we'll give you those numbers here right now. Lulu came out at 405 and reported earnings of 310 versus 29, which is a beat. Sales 2.5, 2 billion versus 2.5 through 3 billion. So they missed on revenue. But then the guidance a disaster here, Joel. Q3, they see 218 to 223. Analyst estimates way up at 294. And then also they're lowering the fiscal year 2025 from 1455, 1478 down to 1277, 1297. So nothing great. They did cite tariffs They said higher levels of tariffs on imports in the United States and removal of the de minimis exemption as an issue with as well. So we were right to be concerned about tariffs issues there too. So overall, Money Mitch in the background, he wants to come in here with some talking too. But that's my thoughts on Lululemon. Mitch, what's going on?
What's going on? And looks like just the pants just last too long. It seems like the product life cycles are running too long. That was given also in the conversation there. The lounge and social categories have become stale, and the companies become too predictable in the casual offering. So there are plans to increase new styles from 23% to 35% assortment by spring. The same store sales in Americas were down 4%. Overall comparable sales up only 1 versus 2.2% expected. The gross margins also declining here, 1.1 percentage. That's going to be a key focus moving forward, because they haven't really broken down below 50%. They're at 58.5%. I'd continue to watch that to see if maybe they start to break that. That could be a real sign of disaster for this company. And of course, like you mentioned, a bunch of that tariff expects $240 million to be the full year profits from tariffs, right? The hit to their profits. That's massive there. Looks like Lulu is going to be in a world of hurt here.
Well, it went straight down. And it was a little bit a minor defense at the expected move. That was like right around 182.
182.
But you could just see, like, it just wasn't getting over that. It was just heavy. And right now, you just got a step down seller. That last blip was probably some overnight prints or something. You're almost back to, I don't know, can you think about the COVID low now? You took out the April low from 2020. Danger, like Mark Chaikin says, bottom fishing is a dangerous sport. If you're short, pick your level. Right now, COVID low was 128.85.
Wow.
So that's still
crazy
40
to talk
points
about
away.
that.
I mean, I will say I thought it was overdone at 180. I thought it was overdone at 175. I thought it was overdone at 170. And now I think it's overdone at 165. So
yeah.
The
problem is, and we talk about this all the time too, we're going to have Eric Krull on later with the life cycle trade, obviously talking IPOs, but the life cycle trade on retail stocks is when they first come out, it's explosive growth. Usually when they first come out, out of the IPO gate, there's explosive growth. Everybody's excited. These things can trade with 40, 50, 80 times multiples because they're all excited. Inevitably, yes, I said inevitably, that growth eventually slows. And what you see then is that multiple contraction, because these stocks do not hold those margins. They don't hold the growth. And inevitably, the growth slows. When the growth starts to slow, that's when you get that severe multiple contraction. If we look at Lulu, a year and a half ago was trading 40 times earnings. Lululemon is now trading 13 times earnings. So it's starting to become a value stock. At a certain point in time, value stocks will defend this. But we've seen Under Armour, where it had the explosive growth to 40 times PE back in 2017, 2018. Everybody was wearing Under Armour, and they had the best, people, out there, celebrities, coming out. And it slowed too. That growth started to slow, and it's never got it back. And I mean, now you look at Under Armour, and it's trading 20 times earnings because the earnings have actually come down. And I mean, that's the problem here too, is the earnings are expected to go down now at Lulu. And so that multiple comes up because of that as well. So lots of things to think about here, but it's just not a slam dunk that a stock like this bounces back.
Yeah, here's your PE right there. I love the conversation.
This is a great chart.
Yeah, I was just thinking. I just wrote down a PE chart on my
Where
thing.
do you get that?
Come on, it's Money Mitch.
Did you made this up yourself?
No, we didn't. It's
I just did that. It's fiscal.ai. We'll give them some love.
Fiscal.ai?
Yeah, so I love the graphical representation, but
awesome.
There you have it. There you have it.
I love a PE chart.
Yeah, as high as 2020. The 2020 high up there towards 89. 89, 90 times earnings. Stock. Now down towards 13.9, 14. So
Yeah,
big
that's an
difference.
awesome chart in itself. We should just sit here with this chart all day and just go through all. Do Under Armour now. Do Under Armour because you'll
Yeah,
see
we
what
can do
happens
Under
anyway.
Armour.
We got Dennis going on something new here.
All right, it's fun.
He showed this
go get
before.
toy.
He showed this
I
before.
know. I want to. He's showing it now, and I want to see it now. So
Yeah.
Under Armour, we got ratings. If you can show that PE chart again. Okay, so you grab PE, you show that PE chart.
The PE.
Well, that's kind of weird.
Yeah, there's something wrong with that.
Can you go back further?
like
Maybe you're not going back far enough because Under
Yeah,
Armour had the
let's go
explosion in PE.
quarterly.
You
Let's
got to
go
go way
quarterly.
back.
Yeah,
Okay,
let's
you got to
go.
go way back. Okay, we're
I think it only goes back to 22. There's something about the way that they did.
Okay.
okay. Well, we'll have to
Estimate.
find out because Under Armour was like 2018 when it had the PE of 60, 70, and Lulu's having its Under Armour moment. Don't kid yourself. And look at where Under Armour is. It's still at the lows. So I don't think I'm excited to jump in and buy the Lululemon dip. Yes, I put it on for a swing trade because I thought there was some love happening there. We made a little bit of money, but I wasn't taking it through the report. I really never intended to take it through the report. So Lululemon having its Under Armour moment.
Before we go to our next thing, I skipped the macro, and since we're talking about tariffs, and they did mention that in the call, U.S.-Japan trade deal again.
I know.
And,
a trader messaged me last night. I think this is the 37th time they've announced a deal with Japan. I was like, obviously an exaggeration here, but I mean, remember the China deal? Like, oh yeah, we got a deal with China. The White House official deal with China. Now last night we got Trump tweeting out that Putin and and India and China are all in cahoots together against the U.S. and he says, "Good luck with that" type deal. I mean, so now it's all on economic war over there, despite having this deal that the White House announced a month and a half ago.
Yeah, there was slight details that needed to be released, and that's what we always get with these deals. It's like at first we get like the opening, and we don't get really the insides. So final details coming through, and of course, a lot of it focused on the auto sector. Of course, after Toyota warned of nearly $10 billion hit from Trump's auto tariff, that would have slashed their profit forecast by 16%. Of course, Ford and GM are already facing billions in tariff-related losses from this. But what was been adjusted here is the tariff structure includes sector-specific levies beyond the 15% baseline for auto, aerospace, pharmaceutical, and natural resources. You got to dig deep to really understand, but specific commitments that were included here in Japan's massive investments, that's why this deal was agreed upon, was included 100 Boeing planes, 75% higher U.S. rice imports, $8 billion in agricultural products. Of course, we know that Tokyo agreed to invest $550 billion in U.S. government-selected projects, and will increase American agricultural products, corn, soybean, commercial aircraft, and defense equipment. So, hey, he did get a lot of deals done there.
You gotta give it to him.
You gotta give it to him.
Gotten some deals.
There's money there.
Been, these companies coming in. So the art of the deal. I know, love Donald Trump or hate Donald Trump. The art of the deal has kind of worked in a lot of cases here, where he's thrown out these ridiculous numbers and people coming back at 15% tariffs. And did we not say it's going to be 15% across the board? That's where it's landing for everyone here. So everyone's like, feels pretty darn good at 15% when you were looking at 50, 60 in the case of Vietnam, 98% or something like that. I mean, it feels pretty darn good to get a 15. So the art of the deal has won.
And Boeing's not doing too bad on these deals. I will say that.
Well, then the companies can swallow 15%. We said that. We can't swallow 50, 60, 80, 100%. 15? Companies can figure it out, and they're absorbing it. And they are getting hit to a certain extent. And Lululemon's feeling a little bit, but I don't think we have a deal with Vietnam yet. But when we come in and we look, at Caterpillar, like obviously they're getting hit a little bit. Deere, there was a New York Times article talking yesterday about Deere, $600 million hit from tariffs, demand, metal costs going up because of the tariffs. So, I mean, we are seeing it a little bit, but, is it making a difference in the stock prices? Not really. I mean, Caterpillar's kind of taken it in stride. Deere, that article came out in the New York Times, I believe, after hours yesterday, and Deere is trading down a little smidgen on it with some odd lots down $1. But, taking that in stride here too. So, I mean, tariffs, the market has accepted tariffs. The market is not concerned about tariffs at this point in time.
Okay. Wow, we had a big winner out there in earnings, and what do you know? It was mega cap tech again to the rescue. Let's go to Broadcom earnings. Broadcom announced earnings after the close yesterday around 4:15. Had a slight dip, but then people came to their senses. 169 versus 165 on the EPS. Sales beat 15.95, 15.83. Let's bump up Q4 sales. And how about the $10 billion mystery AI?
That was it. The stock was flat going into the call. The stock was at 306, 307, and really not doing a hell of a lot. And the people who were buying it for buying calls with the 17-point expected move were really disappointed at that point in time. And then on the call, they announced that they just had a $10 billion sale to a mystery customer, and the stock exploded. And it hasn't stopped going up since. And all night long, I mean, this thing has rallied here, and it's 346 now. So, I mean, this is incredible. Again, sexy story. This is your, an AI play, obviously, with a value AI play for the longest time. I don't know if it's that anymore here. But new all-time highs. I don't like messing with stocks making new all-time highs. Had a little resistance at 317, 318 last night, but now it's just off to the race. It's up 40 points. Is this not incredible, though, that Broadcom is up 13%? The S&Ps are up 9 points only? Like, I mean, what's the disconnect? Well, you know what the disconnect's going to be. You know what they do. When Broadcom rallies that much, you know what they do. They sell other things. They make up the difference elsewhere. So expect financials to probably be weak today. Yes, we talk ETF rotation continuously on the Stock Trader Network because it makes us money. That's why we talk it all the time. It makes us money, the rotation.
Money,
you
money,
get sick
money.
of hearing rotation, then you're sick of hearing about money because that's what, nobody trades on is the rotation. The rotation is there. It will be there today because with Broadcom up that much and a lot of other tech stocks, Tesla having a day too, which we can get to in a second, there's going to be some stocks that are going to trade down here today simply to make up the difference. NVIDIA, AMD, some semiconductor talk is probably two of those stocks that you'd think would get a lift, but they're not going to today.
Yeah.
NVIDIA and AMD are actually getting hit.
Yeah, interesting divergence here, and we could talk about that in a second. I'll do the technicals, and this will be very brief. I don't know where this thing's ever going to stop. I mean, it's just pushing. It's just bid. It's just there's no office.
Moon.
Yeah, this is just like a guy walks in the S&P 500 pit and he's bullish, and he walks in. And he goes, "Where offers? Give me an offer." Someone offers, "Buy it," and then he bids higher. Then he asks for another offer, and someone gives him an offer, "Buy it." Then he bids it higher. I mean, that's what you're looking at. If you have some options, that expire today, once again, a 340 call right now is going to have a different price than if it's trading at 346 at whatever time, or you could just roll them over. Unbelievable move. Is this that bad for NVIDIA and AMD? You got AMD down 4 stakes on this after the downgrade yesterday. That's a big move.
I think it's rotation too in there. Like they're knocking NVIDIA a little bit on the rotation too, because you want to know something. You could clearly see it even before the semiconductor stuff. And Mitch, if you want to come in, there was some news in the semiconductor. Trump talking more tariffs there on chips. So I mean that's hitting obviously NVIDIA, AMD to a certain extent here. So that is a headline. But if you looked at the actual trading action when AVGO started rallying, NVIDIA started selling off. Is that not crazy? But they got okay, well, AVGO's got a huge market cap. S&Ps aren't moving. We got to sell something. Let's start selling our NVIDIAs. Let's start selling our Apples. Let's start selling, whatever else we can sell. Amazon was trading down here too because we got to make it up somewhere.
Yeah, this is really some serious damage from AMD, which has been under pressure. Got the downgrade yesterday, and it survived yesterday. Very interesting with the market up so much. Yesterday's low, 157.79. We're right there right now. Another low in that area. I mean, if you're, and I said this yesterday, if you're a long-term investor here, in AMD, you spent all this time since May above the 50-day moving average, right? Never even sniffed it. If this 50-day, which is at 161 right now, this turns into major resistance. I mean, I could adjust this to the 200-day, but if you're long AMD, you're not going to want to see where the 200-day moving average is.
I don't think it'll get there. I like it around here, but we'll talk a little bit more about that.
I
Trump
like it. No,
doubling down.
I've heard that. That is some dangerous terms. I've heard. I heard that on the
It's been
oldie
sitting
bets.
here too long.
I like
sitting
to
here.
hear.
Sitting
I'll
here.
talk
So,
against my book. I think AMD
real
is
quick
going to break
technicals.
down.
Real quick technicals.
Okay.
You see how this has support trying to attempt to break down 3, and yesterday is like the 4th time to try to break down the support of the 160 area. So the rule of 3, I call this every single time, guys. You try to break down support, you look for the liquidity move today. You want to see liquidity attempts. So essentially that there's like volume profile right there at that 160. You want to see it try to get taken out at the open so that they sweep all that volume, then come sweeping that back through the open. You talk about opening price all the time, Joel, how important it is. I'll be looking for those liquidity sweeps on AMD and then that move higher. Of course, we need to see the overall Qs kind of drive with this, but that AVGO earnings is a really good outlook, not just for AVGO. It's a good outlook for NVIDIA. It's a good outlook for AMD. It shows that demand is still out there. If there's a random guy or a random company willing to put that much money, there's still demand on the sideline there to keep driving the AI chips forward. Now, Trump is double downing on the chip tariff conversation, just a conversation yesterday, of course. Tech CEOs all around the dinner at the White House, 24 CEOs. Trump knows how to do a dinner party. That's one thing I'll say. But definitely, Trump specifically noted that Apple CEO Tim Cook in pretty good shape, thanks to the company's $600 billion of U.S. manufacturing commitment. Of course, what is this all about? Is that you need to commit to the United States, right? The policy is likely to spare major players like TSMC and Samsung, who have already committed hundreds of billions of dollars to U.S. plants since 2020. Trump did offer few specifics, implementation timeline, or exemption criteria. The dinner did feature tech leaders like Mark Zuckerberg's, OpenAI, Sam Altman. They were all giving Trump, of course, some good praise on his pro-business stance. Also noted Google was definitely giving him a good pat on the back for helping them out get through their situation. And notably, Elon Musk was absent from this and was invited, but that's for another conversation.
Yeah, we'll go to that right now. I just keep it. I mean, just keep in mind here, 80 to 180 April move.
It's a huge move.
It's a huge move.
I mean, we could say AMD is underperforming, but holy crap, it was up 130%.
I know.
What do you want?
I mean, it's a great.
It's a huge winner. Huge winner.
Huge. Let us get out, please.
Well, I got a long-term account, so I've been in it. I've been trading it from the long side, making lots of money on the trading side of it too. But I'm holding that long-term investment because I do believe what Mitch is talking about here. I think when we look at AMD 5 years from now, I think it's a hell of a lot higher. Yeah. 5 days from now, it might be lower. I mean, it's been hanging out at this 160 for a long time. It wants to go down. It's heavy. It feels like it wants to try 155, 150. But, to Mitch's point, eventually might reclaim the 160 and continue. And the fundamentals are still good here. So, I mean, the difference between like AMD and Lululemon, like AMD could break down, and go down. But, we've got a story here. We've got, growth. We've got Lisa Su working on a lot of things. Hell, she's got to deal. They got to deal with IBM on quantum. They're all over the place here.
And
there's
just one answer. There's one answer that we
know where the revenue
right now. Revenue's coming from China. That's what we're going to be looking for. That's the next earnings reports on these big AI names. The focus will not be towards how America's growth is going, but how China's growth is going. Because if they get access to complete access to go selling there, they're going to go try to sell. So get ready for that. That could drive the bottom line further and drive these stocks to continue higher, even though I see mentions of PE worries in the chat. It's not a focus here if the revenues keep driving higher.
I mean, this PE argument was the NVIDIA argument why everybody said don't buy NVIDIA in January of 2024.
It's a learning lesson.
NVIDIA was trading 100 times earnings, and everybody's like, you're nuts. And I'm like, well, it's not, because the projections are where we're going. And if you looked at the projections, and Dan Niles pointed out very clearly, it was 24 times, forward earnings looking ahead. They're like, well, those aren't real earnings. Those are projections. Those projections ended up being light. Those projections ended up being very light. And if you're looking back, NVIDIA, back at the beginning of January 2024, was trading at, we got to do the split adjustments here. Wow. Was it 2023? Am I losing my years? I think I am, maybe. Was it 2023 or 20? Maybe it was 2024. January 2024.
With that
It's like
first
$48. It's tripled since then, more than tripled since then. So, I mean, always looking at, lagging PE, looking at the trailing PE isn't as good of an idea as looking at where projections are going. Because you know what? These analysts, right or wrong, they often get the projections, a little bit better. They're not that bad at it there. Now, sometimes they get them dead wrong. And yeah, they're not real earnings. But if you're sitting here always looking at trailing PE, you're gonna miss the growth stories. You're gonna miss those. And the market's all over that. So you've got to be looking more forward PE. So stop looking at trailing PE, start looking at forward PE, even though it is just projections.
Let's move over to that Elon Musk compensation proposal here. Another mega pay package available here for Tesla, for Elon at least, as it's investing, asking investors to approve a new outsized compensation here. The world's wealthiest individual will receive 12 tranches of shares based on hitting specific goals. These goals would be great for, of course, Tesla's investors. The first award would require Tesla to nearly double its market cap to $2 trillion. It must achieve a cumulative production and delivery milestones of 20 million vehicles, which pretty outsized bar here. So definitely a big bar here for the world's most valuable automaker. Of course, this comes after the previous $56 billion pay package was struck down by Delaware's court. And it could represent another attempt to tie his compensation to Tesla's growth in the company.
I mean, there's so many details. There's like 12 things that has to hit.
Yeah, there's a lot.
And one of them is that Tesla trades at an $8 trillion valuation. So if Tesla goes to an $8 trillion valuation, I don't mind paying Elon Musk a little bit of money. So that's what I would say is, the people can look and say, holy crap, they're giving Elon too much money. If he could take this to an 8 and from this at this point in time, that would be 8 times the current price. I mean, I think as a shareholder, I'd want to pay him that too. So this is good, it's given Elon Musk incentives here, like financial incentives as well. Not that he needs them. He wants to obviously, make everything the greatest. He works, nobody works harder than this guy. If you hate Elon Musk, that's fine.
Has he been quiet lately?
This guy works, man.
Has he been quiet lately?
Well, they've shut him up. They've shut him up to a certain extent. Yeah. The board has shut him up. You're darn right. The board is winning here. And it's good for Tesla. That's good. That's the best news for Tesla. If Elon Musk doesn't go on his rants about attacking the president and attacking this and attacking that, just sit back and run the company. That's the best thing. And you're exactly right, Joel. He has kind of been quiet lately.
Yeah, like this says, right? Another attempt to tie his compensation to Tesla's growth. And also don't put it out of the question, right? We're talking EVs, but this company will no longer be focused on EVs in the long run. Robotics and AI is the move to get that market cap up there. It's not going to be done with, just Tesla autos. That's not going to do it. It has to be the robotics and the AI to really take it to that level.
Okay, let's
August jobs report is supposed to be coming. The Bureau of Labor
Let's go. Let's take a look. Outlook here.
So just to interrupt you, Bureau of Labor Statistics was announced 20 minutes ago. They were having technical difficulties. We think we're going to get this number, but I don't know if those technical difficulties have
75,000 is expected here in August. We'll see what comes in here. Guys, keep a lookout. We'll see what happens. I'm looking around to see if you get it.
We've been leaking. There's been a leak.
They're scared. They're nervous about this number. They're nervous about this number.
Maybe they're
the number that might not come out.
Exactly.
I mean, don't
Maybe
know
they're
we have a
nervous
show
because
to do?
they don't know what's going to come.
This is
or
ridiculous.
if it's going to come. Let's see what happens here, guys. This is going to be interesting.
Well, we experienced technical difficulties? So according to my official clock here, 4, 3, 2, 1. Okay, I think it's out.
It's copy.
Oh, it is. They tried to pop it.
Oh, wow.
Look at the algos get runned over.
Yeah.
Imagine the algo they tried to
So
buy
it,
up there.
it must be a decent. Right now, the price action.
Non-farm payroll is 22,000 only. Expected 75,000. So unemployment also coming in at 4.3 versus 4.3. But that non-farm payroll at 22,000 versus 75,000 expected. Yeah, that's going to definitely be a little bit of showing more weakening. But this shows what more.
Yeah, this should be good news. What's
More
wrong with the
support.
market?
We've already
Rates are
told you
going
the
to
market has
zero.
priced that in. The cut is already priced in.
Yeah.
Does
Cut's
this
priced in? We're going.
Does this though start to show that it's not just a cooling of the labor market, but an actual quick decline here? That's the only maybe concern that I could put on for the bears out there. But I don't think this will last too long. What are you guys thinking?
I think it's just chop, and I think it's just noise at this point in time because we already know rates are going. So rates are going down the quarter in September. So that's why these numbers do not. So write this down. These numbers don't matter as much as they did 2 months ago when we were uncertain about rates. Now that we have certainty on where rates are going and they're going down in September, these numbers start to not matter as much. So chop, slop. Sure, we don't want to see, the labor force fall off a cliff here, but I don't think it's necessarily like, okay, yeah, like we need, lower rate, or we need, weak numbers to get rates lower. So that we have more certainty on rates. I think it's more chop. You're going to see off this.
What are the bonds telling us? Maybe TLT. How's that reaction here?
Well, no, right there. It's not even lead. TLT's just kind of steady as she goes. Steady as she goes. It's the exact same spot where we were before the number, 87.55. Exact same spot.
Let me just pull up the TLT. I'll have to go to the 24-hour. You did get a little bit of a spike, and it did get a nice spike. It did come down, but I guess we could just put down the popcorn now and wait for the inflation data to come out next week, right? I mean,
that's the number that matters now. Jobs don't matter as much as obviously inflation data. And and we'll spook the market if we start to see inflation continuing to tick higher, because that can change the path. That could change, okay, well, we can't start thinking about 3 or 4 cuts this year or 50s, if inflation starts to tick higher already. So that's one concern, is that could change the path. So I think that's more concerning right now than jobs. But the market's in full bull mode, man. Joel, they'll find a reason to buy.
Yeah, they did.
No matter what. They dipped a little bit. The money mayor's like, oh my gosh, we got a 9-point sell up. Buy, whatever. Get there. Buy. That's what they do. I've seen enough. Go get me Eric Krull. I've seen enough of this job stuff. Let's go get Eric Krull. Bring him in a minute early.
Special guest here, Eric Krull, the author of the Lifecycle Trade, joined us super early. I almost was ready to put him on the show, Dennis, instead of you. He showed up at 8:00. Eric, how you doing today?
I'm doing great. How about you guys? You're having an exciting show so far today.
Yeah, thank you. Thank you. But we're going to go to your slides here in a second, but let's just talk about the interest rate environment, right? And favorable for IPOs to an extent. Just give us your top-down perspective on that.
If they do lower interest rates, that will help the IPO market. These companies are financed through venture capital and through debt, and so the lower the cost of money, the better off they are.
Yep. Okay. All right. You always do your homework for us, so we will add to the stage your excellent slides in his preparation. Couple lean years, but IPO activity picking up.
Yes, we're seeing more IPOs at this point. Year to date so far this year compared to last year, they're up 58%. They are smaller. The proceeds gained by these IPOs are down almost 20% per company from the prior year. So we're seeing more IPOs, but smaller companies coming out, with a few exceptions. We've had some pretty large ones, but most of them are smaller than they have in the past. And hopefully this year we'll see even more come out by the end of the year with some of the big ones, which we'll talk about. And what I'm seeing, though, is you can still see from that histogram on the left, the number of IPOs is still pretty much below average. We had that huge peak in 2021, And that does not even include the 442 SPACs that came out in 2021. And most of those were disasters for investors. But we're looking at the IPO market coming back, and we're looking at maybe some good ones coming out that would be maybe attract everybody to be more interested anyway.
Okay. So they're not as big. The proceeds are down, so probably not as big a benefit to the banks, but they got plenty of other catalysts going for them as well. Okay. Wow. I'm looking at some of these charts on these things, and it's unbelievable. Let's talk about the standouts 2025.
Okay. What I'm showing here is first, from our book, The Lifecycle Trade, we talk about stocks that trade more than $20 million a day, dollar volume. Those are the only ones that really attract institutional investors. And of the 142 IPOs this year, there's only 13, less than 10%, that trade more than $20 million per day trading volume and have also posted gains from day one. Now, we always talk about the gain from the day one close because you and I and Dennis, we're all retail investors. We don't get those shares offered at the offering price the night before. Wouldn't be great if we did, right? But I don't know anybody who gets offered those shares. So
Not
we
very
look at the
Just
day
bad
one
ones.
close.
Just the bad ones.
Yeah. So we always measure from the day one close. And you can see that there's only 13 that have gains from the day one close. Now, the first one, this Rich Sparkle Holdings, I would never even look at that stock. That's a Hong Kong stock that does printing for companies. Why it's up 1,000% is because in Hong Kong, there's groups of investors that get together and they just manipulate stock prices. I've seen this in the past on some IPOs where they just run up a stock, it runs up a lot, and then eventually it just falls. So I wouldn't even consider that one. But number two, CoreWeave, I've been watching this one this year. I was invested for a little while. They provide networking for server farms that do basically AI. And so you're looking at a company that had a great run up. It's falling from the peak, a large amount, but it was a good run for a while. So it had a good IPO advance phase, and now I think it's in the due diligence phase. And then there's a few others on here, like Circle Internet Group at number 7. That's one that also had a pretty big run up. It's also coming down pretty hard, so maybe that one will just be a one-hit wonder. We'll see. And there's a few others in there that I'm interested in. Hinge Health is interesting. It's a small company. They do PT over the internet, physical therapy. They link to physical therapists, and they do using AI promote a plan for people who are having pain, for pain management. But that's a small company. I am watching it. Maybe down the road, I'll be more interested in it.
Do you have 3 you're keeping a close eye on?
I'm sorry, could you repeat that?
Do you have 2 or 3 that you're keeping a closer eye on than others? I mean, obviously, Rich Sparkle's not in that category, but is there 2 or 3 that you're really keeping a closer eye on?
Yes, and one of them is CoreWeave, but the others will show in the future slide coming up. We'll show.
All right, let's move on.
Yeah. Okay, so one of the things I want to talk about is one thing that's happening this year is we haven't had this in a while. Some IPOs, they soar on their first day, and this gets a lot of coverage. You'll see it on the news channels on TV. You'll see it in articles in newspapers, but people start getting excited when they hear things like, this stock called bullish. It was up 84% on day one. Or Figma, that was up 250% on day one. And this gets coverage, this gets people excited, and this starts making people think, I should invest in IPOs. I'm going to get the next Google. But what I want to say is don't fall for the hype. As you know, we are big on be patient with IPOs. The vast majority end up being stocks that don't do well. But you do get a small number that do move up a lot, and you want to find those. And so what I'm showing here is headlines from this year. And if you can see in that table below, the ones that did well on day one, you should see that middle column. Look how much on day one gain from the offering price, the day before, the night before price, which you and I and retail investors don't get. Yeah. You can see that on day one, they gained like Figma, 250%, Bullish went up 84%, Voyager, 82%, and Chime Financial, 37%. These are great numbers. We'd all love to get something like that, right? Yeah. But go to the column to the left of that, the first column. Look how much they've actually gone from the day one close. Figma's down 51%. Bullish is down 27. Voyager down 53. Chime is down 35. Retail investors like us, if we got excited and bought on day one, we are likely going to see negative gains, not these positive gains. And so what I want to tell people is be patient. And that column on the far right side, those are prices as of yesterday. Even the people who got the price the night before, two of them are negative returns already.
Wow.
Voyager and Chime, if you got the price the night before, you're down from that offering price. And bullish is only up 34%. And I say only, but I mean, that's good. But these are much less gains than people expect. And so don't believe the hype when you see it on TV or you read it in the paper.
Eric, are there any IPOs that actually go down from their offer, like from their underwritten price, like where they open down? Does that happen anymore? Has there a history of that? Like where you get, the stock, like, yeah, I can remember Facebook back in the day, it opened up like, I think it was 42 and ended up trading 42. And then the next day was down like 38. So you didn't gain anything. Is that like common or not common at all?
It still happens. And when you see it happen, people will say, oh, it was a failure. But it does happen. And we can show on the next chart, next slide,
go ahead.
Not only they do is sometimes they go down, not the first day, but they go down soon after. So here we go. So here's the four that got the great press, like how great of an IPO it was. So look at Figma on the left. You can see two blue bars on daily charts, and look at that after that. And that includes yesterday. Those are going down. I mean, it's maybe not down day one from the day one price, but I would say that's a failure. Look at bullish. The next chart, same thing. Big bar on the first day, went all the way up near $115 a share. Now it's trading much lower. It's, I can't read the number there, but it's probably below 50. Voyager Technology. Voyager is an interesting company. They do medical research, but in like the International Space Station, they're working with trying to do molecule growth up in space. They say without the gravity, they can do interesting things. I don't think they're profitable yet. It's a stock I'm looking at. I'm not really going to invest it now. But again, came out and it's just going down. That's a chart you would never want to buy. And Chime Financial, same thing. Day one, up a lot, down a lot since then. None of these charts look like charts I'd be interested in stocks I'm buying.
Quick story here, Eric. We conversed during the bullish IPO, and I had a buddy that daughter actually works for the company, and he was at his one of his brokerage firms. He went in for an allocation, and I said, go in for see if you can get 1,000 shares, right? And he ended up getting I go, it's crypto. It's institutions. I mean, the market was trading at all-time highs. I go, get as much as you can. I go, this is going to pop on the first day. And, I went back and forth with you. And I was hesitant to tell him just to dump it all on the first day because of what CoreWeave did. But then I'm like, I said, I think, because he got the stock at like 37 or 33. I go, I think you can get 100 for this on the first day if you're happy with 100. And he missed 100. He got out like around 92. He was happy about it. Then I ran him the other day and he goes, well, my wife got an allocation too, but she didn't look at her email. So I still got that one. I'm like, oh man, you got to have. So he merged the emails at the brokerage firm. I won't mention the brokerage firm, but he made me look really good, Eric, and really good. And I credit you. So what
to build on that, Eric, and I want to just interrupt you. So is that the best strategy? If you actually do get an allocation, sell it on day one. Is that the best strategy? Sell it right away?
I would say for most of the time, yes, if you can, because the hype is there. I can show you chart after chart after chart where they have a run up on day one and then they typically fall. And they, as we know, after they go through a due diligence phase, the good ones can come back and go on for bigger gains. And the next chart will show a few of those that do that.
Okay. All right, moving on.
But in most cases, selling on day one is a good strategy if you get allocated shares. So let's look at rubric.
How do you get allocated? Like, you got to be a big customer. Is that it? It's only the big guns, like the big institutional clients here. Can the little guy, I know in the case of Facebook, a lot of those allocations came, but then that one didn't pop at all. But can the little guy actually get, a decent allocation on some of these things? Like, what strings do you got to pull to get those?
You're
really
right.
kiss up to your brokers?
The little guy does not get allocations.
They
right
don't
now.
get it. They don't get the good ones.
No. If you're a little guy like us and you get offered shares, that's a sign that the IPO is not going to be successful. Facebook was one of them. Facebook was one where they were calling people saying, "Do you want shares? Do you want shares?" And I knew someone who was offered shares and they took them. And then Facebook, like you said, came out at a price. And like you said, it was either $42 or $38 a share, and it busted below that on day one and then went lower from there. It lost 50% within a few weeks. And so, yes, in general, if you get offered shares, you don't want them. If you go back real quickly, just one, you can just see these are the ones you asked me earlier, which ones I'm watching. These are ones I'm watching. And in fact, I have positions in Reddit and Astera Labs. I'll just go quickly. We talk about with Reddit in the middle there. It comes out, it went up a little bit, comes down and forms the due diligence phase. And you see that where I drew the line. When it can get back over that dotted line, that's typically what we call the turbulence zone, like the high from when it first debuted. If you get through that, that's usually a good place to buy. And look at these stocks. In all three cases, it worked. Astera Labs and Reddit, two I talked about the last time I was here. On the far right, they had a dotted line showing consolidation. And I said, I'd be interested in buying those if it got above those consolidation areas, because those look like they're in the due diligence phase. Due diligence is when 6 to 9 months after they first have their run up, they correct and they go sideways for a long time. And they go through 2 or 3 earnings cycles. And once institutions see that the earnings are good and the growth is where they expected, then they start buying it up. And that's what happened with Reddit and Astera Labs. And you can see they've had a good run up since then.
All right. What do we got to look forward to?
These are the ones I keep hoping for. SpaceX, Starlink, and StubHub, and Discord, and Stripe. These are big name companies that people know about. I'm expecting them to go public. I've been expecting them all year. Hasn't happened yet. But I'd be interested in those if they go public, especially SpaceX. They really have no competition. Who else can go into space as often as they do, at the price they do, and be successful? So I'm looking forward to that one.
Just to give you perspective on SpaceX, DXYZ owns 11% of it, Destiny Tech, and it's traded in. They buy private companies. That stock has just been trading off hype from SpaceX because like the NAV on that thing, last time I looked was way down at like $10 or $9 or something. It went to 50. And it's just like, this is the only way to get SpaceX. Everybody's that excited about it. So, just imagine like the premium will come out of that DXYZ when SpaceX actually goes public, although a lot of the premium's coming out at DXYZ now. So it's funny, you see the hype in a publicly traded instrument that just owns a little piece of SpaceX.
Yeah, that would be a stock. If I was offered shares at the offering price, I'd buy those.
Oh, yeah.
But you'd buy those. Okay, we'll write that on the list.
If I got offered stock to StubHub, I don't know if I would take it. I think they should have kind of did this like 2 or 3 years ago. There's a lot of competition off there. I know for Michigan football tickets, they've moved off to another site. I think it's Vivid Seats or whatever. Stripe. I have a Stripe account, man. They get paid every day. They get their money coming in every single day, and pretty clean processing. Buy now, pay later in Sweden. Not too sure about that one. And AI powered data analytics. If that one doesn't soar the first day, I don't know. Final thoughts on Discord?
I've been expecting that one to go public for a while. I'm not sure if it's maybe a little too late for them too. And they're, to me, a little bit like StubHub. I expected them to go public a while ago. And I don't even like StubHub as a company because I don't like the fees they charge.
Oh, unbelievable.
Yeah. And but I do think Discord might be an interesting one. I know a lot of people use that one. And so we'll see.
Tell us about your book and how people can get a hold of it. I see you're also offering a master's class. So tell us about the Lifecycle Trade.
Well, the Lifecycle Trade is available on Amazon. And we also have a master class on the Lifecycle Trade that's available through TraderLine. And the Lifecycle Trade is based on a book written by myself, Eve Bobach, Kathy Donnelly, and Kurt Dale. And we did a lot of research into IPOs, over 2,500 IPOs at the time. And we've looked at another 2,000 since then. And we charted IPOs and the typical patterns they go through, the life cycle that most stocks go through. And based on what we discovered, we show rules for buying, rules for selling, and also how to maybe filter your stock list so you can find the right ones.
Yeah, we've been following them with you for a long time. Thank you
Yeah.
very much, Eric Krull, the Lifecycle Trade, joining us on Pre-Market Prep. Thanks, Eric. We'll be dialing you up again soon. I think I got to get you on for some special segments, so I'll reach out to you about that later on. Thanks, Eric.
All right. Thanks, Joel. Thanks, Dennis. Good to see you guys.
Appreciate
All
it,
right.
Eric. Awesome stuff. Like, I mean, it just brings it all into perspective, and people get caught up in the hype and they're like, I'm going to make so much money on these IPOs. And he's just telling you, like, it's more of a selling opportunity than a buying opportunity. You got to wait for these things to come in. But we were talking some recent IPOs here. I want to go to CoreWeave here because we set up a trade last night, actually, in the STN room. And we were looking at CoreWeave, CRWV. And I said, you know what? You want to take a shot here at 87.48, which is where it was last night. 85.26, the low back on August the 20th. And then the low yesterday, 85.21. So don't call it a double bottom, but we look for those little formations there. And I like there could be a shot. Now look, this morning, CoreWeave actually getting some life up $3 here. So STN benefiting from CoreWeave here this morning. Stock is up 3 points in the pre-market. What do you think, Joel? Technicals? Is there life? I made a technical call. I don't even do that.
I know you rarely make technical calls, so that's why it stood out. I mean, the thing about it was the risk reward. Like, I don't know if this thing's going to go to 95 or it's going to go to 80, but it was a bona fide setup, right? Because you had a level that you could lean on. And I remember someone in the chat, what was it? They said, well, I'm going to put a stop at, at 85. And I'm like, 85 with a low at 85.26, 85.21, perhaps the third time it goes through there. Yeah, it may crack it, but sometimes they crack the stops and just go back up. But right now on the move, favorable market conditions here. I mean, even though this has had a serious decline from 180 to the mid 80s, I mean, you did get a pop from 100 to 145. So, I mean, this thing could tack on, 10, 20, 30 points,
Well, it's
easily.
oversold. I mean, at this point in time, we're oversold. And forget about valuation. Technical calls, you don't need to know, like, value. Oh, it's going lower. Maybe it is, but right now it's oversold. So, and you get, catalyst-free trading here to a certain extent. Sometimes, technical bounces can happen. Bounces happen. We play the dead cat bounces on stocks every night in the STN room, and often to a lot of success there too. So, technical calls are good there too. Money Mitch in the background here too. I want to keep him in too. We could do a little bit of ticker time here. We got 5 minutes here. We do have some more stuff. We could go into Tesla. Maybe we should start with Tesla. Obviously, I don't know if we went into the full technicals on it because we started talking about it
right
and then we
before
ran short on time because of the jobs number. Just give us some quick technicals here. We throw it to Mitch here on this one. Let's do Money Mitch on some Tesla. Give us some tickers here, chat, if you want us to ticker time here for pre-market prep.
All right, guys. Well, here's how I have Tesla here. So you guys can see I've drawn this out for a while now, guys, looking for this to break out of this little triangle here. And what we had is a throwback look. This is beautiful. When you get above this major trend line, right, what you want to see is a quick move back. It actually should have held more there, but the undercut actually helps because it washes out some of the bulls that got in on this day, right? This big bar day, right? So you tested back down, but you didn't break that bullish engulfing candle here. So that's a sign of strength coming right back. So now this could start making an attempt towards the top end of the Bollinger Band and going towards the 360s. I've put this line and created this since the 27th. Looking to see that we go up towards the 400. I think Tesla's on a breakout. If you look overall, this stock on the monthly, and I think Joe would appreciate that. I think you overall just look at it on a monthly, and that's constructive, right? A breakout, pulled back, broke out, doing the same thing, holding that pullback area, and now starting to work its way, resolving higher. This looks great for Tesla. In the long run, you're starting to see the MACDs and the RSI go in the same direction. This looks like an attempted breakout here in Tesla.
Their tickers are flying out of the chat here now.
Let's go. Let's get some. Let's run.
Go Affirm. Jared wants to know about Affirm. I want to know about Affirm here too. We'll throw this one to Joel.
What are you seeing here? Boom.
Let's go back and forth between Joel in Mitch here.
Okay,
Firm.
I'll make this
You know,
simple. You got to 100, you got down to 82, 18, 9, so 82, 91. Right there, right now, you're getting halfway back of the move. Above yesterday, it coincides with yesterday's high. Right here, right now. We talked about the gap chart yesterday where, it looked like it was going to open up near the previous day's high. It held that area and went up. That's what you want to see. But just be a little wary that you're getting half back of this move, and you got some work to do in this candle here from when it hit $100.
Open. They want to know open money, Mitch. I'm throwing you OPEN. Obviously, Eric Jackson has been out pumping this stock everywhere he possibly can, even outside Drake's house. The pump is working here because OPEN is trading up again this morning, $6.40. It just keeps blasting off here. Do we chase this money, Mitch? What do we do on this one?
So in this one, you just look for the overall industry also to continue running. I know it's a meme stock, but look for Zillow to stay strong, because if that breaks down, I don't think this will be able to hold on either. Zillow's been on a sideways trend here, looking for a breakout above 84. So let's see.
Do you think fundamentals matter at all?
It does now. Because why? Because it's tailwinds also. Don't forget that this open doesn't just only have meme behind it. It also has rate cuts coming. That could help the overall underlying business. So what you want to have is tailwinds with meme stocks, right? You want to have some kind of fundamental support here. OPAD is another one that's been running with this. So if you're looking for an opportunity, this looks like a better setup to me through 6, because you have this nice sideways action here. It just undercut. What do I talk about? They like to liquidity search before they send it. So that's exactly what you're getting here. An undercut yesterday through that kind of low right around the 470. Now you're starting to hold 5. This looks like it wants to start going. OPAD, I'd look for a trend line break. And then for this to get strong today, OPAD, not a bad look there.
Okay, I'm going to do 2 more. I'm going to Rivian day by day. Rivian for Joel, RIVN.
A lot of people watching this one. I know that one.
They cut 15% of their workforce. Yes, I think
it's a good thing. Cutting expenses, make more money.
Lululemon closing stores. You know that, right and left. They're like, where are we close? That store in Birmingham, Michigan. That's horrible. We're closing that. No, I'm being facetious. Rivian, not a bad looking vehicle. It has its ups and downs. Cutting expenses is good. How does it work through this red bar today? Trading up a nickel. If you just have to say, I have to own this today at 13.75, well, you may get a shot to buy it at the 50-day at 13. So just seems like buyers, they were very patient at 12 for a while. I'll buy 12 as much as I can. And then the big day, they didn't get much of a chance to buy it at 13. So we'll see. That's right with the 50-day moving up. So not bad day yesterday, on the rebound a little bit today, but 13 looks like the major support to me.
They want Circle. I'm going to take the last one on Circle too.
All right.
Again, if you guys want to chime with the technicals, I'm not doing the chart, but we see CoreWeave showing some life here today. CRWV, I think that's not a bad thing for Circle. I actually just took a trade in Circle just for a day trade here, because I think with CoreWeave's strength, these stocks have been tracking each other to a certain extent here. And if CoreWeave can continue to go, maybe, just maybe, Circle, which is massively oversold, it was $260 a month ago, 117, could get a little dead cat bounce. These are nothing more than dead cat bounces here, folks. Mitch, what do you think?
Yeah, this is more like a Denmark, kind of like you get in those 8 kind of down move days, trying to reversal back. I think this is one that you'd look to show me a move, but I can't blame you. At least you have your low right there in the area. You know where your risk is, right? So risk to reward here is set up there. I like the CoreWeave pullback. It seems to make sense more for me to get the lift there, but I'd be looking to see Circle, and you just want to see Bitcoin start to kind of ride.
Okay, 8:59. We're going to wrap this show up today as the S&Ps are going in uncharted territory, making new all-time highs. We just want to tell you, proud sponsor of our show, Hive Digital. This show is brought to you by Hive Digital Technologies. a global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI. Operating with 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. Scan the QR code on the screen or visit the link in the description to learn more. Folks, the rally continues, and you know what? The market talk will continue on the Stock Trader Network. Join us now.
StockTraderNetwork.com.